The Bank of Canada held interest rates this morning on March 8th for the first time in 12 months since they started increasing the rates to be able to curb inflation in March of 2022. And in this video, I'm going to break down exactly what this is going to do to the real estate market in the coming months for March to about April or May of the spring market for this year in 2023. Hi, my name is Jonathan Lur, and I'm a local real estate agent in the greater Metro Vancouver area, and I bring videos like this to you each and every single week to help keep you informed on what you need to know to make the best decisions possible when it comes to buying, selling, and investing in real estate in our local market. And if you gain some value for this, please make sure to like, to subscribe, and to click that bell to get notified of future videos as they come out. With this announcement, the bank noted that the GDP growth in the last quarter of 2022 basically flatlined, and investment in both personal spending and business investment also looks like it is plateauing, and the rate increases that they've done over the course of the past year, over 400 basis points worth, have started to work their way into the market and create the desired result that the bank is going for, hence them looking to actually pause the rates as of today. Of course, it always comes with the caveat that if there is significant changes to the data or inflation starting to peak up, then the bank will start looking at increasing rates again. However, at this point, all the data is trending in the downward direction for inflation and a plateau of GDP growth. So that is everything in a positive direction of what we want to see. And the chief economist at the Bank of BMO also suggests and stated that they think that the Bank of Canada is going to hold rates for the remainder of the year. So what is this going to do in the real estate market? Well, let's take a very quick recap on February. Inventory, super low, and only second time in history where inventory is basically plateaued at this time of the year instead of spiking up after December. Median prices in February jumped by nearly $40,000, a 4.2% increase over January. And our sales to active listings ratio jumped by 10% into the 23% range. Anything over 20% for 3 months is considered a seller's market. So we are 1 out of 3 months on our way there to making that happen. Moving into March and the spring market of 2023, it looks like all these factors are going to continue. And just in the first week of data from March in terms of sales prices, the median price is $20,000 over top of what we saw in February. So just in the past basically 5 weeks, we have seen a $50,000 increase to the median prices, bringing them to a 10-month high. And it also looks like inventory is going to stay exactly where it is, and there's no signs of an influx of inventory that is going to be coming into the market, which is going to force prices to continue on their way up. In their statement as well, the Bank of Canada also said that they think inflation is going to get down to around the 3% range by about middle of this year in 2023. And that seems pretty optimistic to me, but basically what they're saying is that inflation is on the downward trend, and what that's really going to do is it's going to bring consumer confidence up. Now, I want you to take a look at this graph right here, and this is a graph on consumer confidence over the last 2 decades. And really what you're going to see, there's 3 values that you see. One at the very end, which is the time that we're in right now. The only other areas where we have been in such a valley of consumer confidence being so low is right when COVID struck and the world was shut down, as well as looking back to the left there, you can see that is the global financial crisis of 2008 and 9. And so those are the only periods where consumer confidence has been as low as they basically are right now, but we are officially on the upward trend. And now that the Bank of Canada has said that they are holding rates, this is going to drastically increase consumer confidence, and you can be sure that this is going to pull more people into the market. So I basically said it already, but in a nutshell, what can you expect in the upcoming spring market in 2023? Multiple offers, prices going up, and you are in a seller's market that the sellers have the negotiation power. Welcome to the spring market of 2023. If you like this video and gained some value from it, please make sure to like, to subscribe, and to click that bell to get notified of future videos as they come out, as I'm bringing out regular videos every single week to keep you up to date on what's happening in the real estate market so you can make the best informed decisions possible. If you have any further questions about your situation, please make sure to go down below this video and click that link to book a 30-minute call with me. So let's jump on board, let's have a chat and just see where things are at and what makes sense for you moving forward as that next step.